Welcome to the ETF.com video series. My name is Dave Nottig, Managing Director at ETF.com. I'm here at Inside ETFs with Ryan Issakainen from First Trust. Ryan, thanks for joining us.
My pleasure, thanks for having me.
So First Trust may not be a household name to a lot of people, but you guys are a powerhouse in the ETF industry, 141 ETFs, many multi-billion-dollar products. So how should investors think about your product line overall?
So the fact that we're not a well-known name among retail investors is actually by design. We create products to be tools for investment advisors, for professionals to use with their clients. You'll notice that among those funds, we don't have any broad benchmark, just replication. We try to create tools for advisors to seek alpha, whether that's through narrow industries and themes, whether that's through multi-factor strategies, or whether that's through full-blown active management. We try to be innovative and bring tools for advisors to add something to their portfolios.
So looking forward to 2019 and looking backwards a little bit, your short maturity bond fund, I think it's FTSM, was just an asset gathering powerhouse last year. What do you think the 2019 story is going to be?
Yeah, that has been a really effective tool for investment advisors that are looking for alternatives that are generating more yield than just your traditional money market funds. And so I would suspect that that will be continue to be a really effective tool and continue to gather assets. We really find our asset growth taking place, though, in a variety of actively managed strategies. We've got a LMBS, which is our short-term bond ETF, has brought in a lot of assets, uses mortgage-backed securities. The team has a really unique strategy that helps diversify investors' portfolios. We've got a number of equity active managers that have really demonstrated the ability to add value. One example of that would be Riverfront and their dynamic currency hedging strategy. So for investors trying to decide, shouldn't I manage my currency risk, that could be a very useful tool.
And apparently you're not that concerned about exposing those strategies. That's been one of the reasons we haven't seen so many active equity strategies, is that concern about disclosure. I'm guessing you're not that worried about it.
Well, there are certain strategies, granted, that maybe you're going to want to have a non-transparent portfolio. If you're very concentrated in less liquid securities that are traded, that are exchange traded, then maybe you want to guard those holdings. You don't want to disclose them to everybody so they can front run your trades. But for most strategies, it hasn't been a problem. When we look at our strategies that have been around the longest that are actively managed, they've done just fine in terms of performing, and the transparency hasn't been a detractor. On the other hand, it can really add value to an advisor who's trying to build a portfolio, control overlap, and really know what's in that portfolio.
Yeah, knowing what you own, I mean, one of the cardinal rules for financial advisors. Ryan, thanks so much for joining us. Thank you for joining us here at Inside ETF. Stay tuned for more live from the show.